Zero down mortgages are a thing again. Is this 2008 all over again, or is this a brand new world that we're living in? Let's get into it. Hey, how you doing? Derek here from M1 Realty. I'm the broker owner, founder of the company. Started in 2014, almost exactly 10 years ago. It was myself and a laptop up on the third floor of an office suite here in Ferndale, Michigan. Fast forward to today, we got a storefront right at the corner of 9 and Woodward, downtown Ferndale, and I've got the biggest, baddest, best team of all-star agents. So whether you're looking to buy, sell, invest, rent, whatever you need, we've got you covered. We even do property management now. So last year we did a video because United Wholesale Mortgage rolled out this groundbreaking program, 1% down mortgage, and that was awesome. Problem with that program is there were all kinds of stipulations associated with it as far as like geographical, like where the program would apply, credit limits, income limits, in short, it wasn't for everybody. So this year, fast forward to this year, they've upped the game even more. And it was a couple weeks ago at UWM Live. It's their big annual event. They rolled out the zero down mortgage. So let's talk about that. The thing that I really like about this program is that a lot of people qualify for it. There's actually two separate programs, and we're going to talk about each one. But combined in general, what this does is as long as you're looking to buy a property that's $500,000 or less, makes it much easier and much more affordable for you to get into that home. So let's clarify and get into detail about how this program actually works. So what it really is, in essence, is a 97% mortgage, and typically where you, the buyer, would put 3% down as your down payment, what it actually is a loan of 3% up to $15,000 that's given to you by United Wholesale Mortgage. Now, this 3% loan, the beauty of it is it doesn't have to be paid back in monthly installments, and it never accrues interest. So it does have to be repaid, but only when you either refinance your property or you sell it or that mortgage gets paid off. So 30 years from now, you're going to have to owe them 15 grand. At that point, if you stayed in the house that long, 15 grand better be a drop in the bucket of what the place is worth. And people are much more likely to refinance during that 30-year mortgage period, but you're only going to do that when it makes sense to do it. So, if you don't have 15 grand in equity in your home yet, you're probably not going to want to refinance anyway. But, you're working with whenever you refinance, whoever you're working with on the mortgage at that point is going to know that this, $15,000 loan exists, and they're going to be able to calculate it and see if it's in your best interest to refi or just to wait. Another stipulation on this one is it's for primary residence purchases only. So sorry, investor clients that come to me from this channel, you're still going to have some skin in the game if you're getting a mortgage. But for our primary residence buyers, this thing is awesome. It is for single-family homes and condos, and it can be in single-family homes either in an association or not. Doesn't really matter. It can't be used to cover closing costs, but that's what we have seller concessions for. So let's talk about that for a second, because we're getting into this home for zero down. That basically references your down payment. There's still closing costs associated with purchasing a home. Most of those are on the mortgage side. But we have ways of dealing with that as well. So we could get you into this mortgage with zero down, so you don't have a down payment. But now, say you have 3% of the purchase price in closing costs when this is all said and done to get into the home. What we can do at that point, and it's not super common right now in this current market, but it's not unheard of either, is to ask the seller for seller concessions. And what that is they take a percentage of their proceeds, give it back to you, the buyer, and we could feasibly get you into a home right now up to $500,000, and you have to bring exactly $0 to get into it. So between this program where they're getting into the home. There's no down payment involved, and having the seller provide your closing costs. That's how we do it. I mean, you're literally getting into this home, and it's not costing you anything out of pocket to do it. So I haven't seen this in 15 years, but there's a lot of difference between how it was then and how it is now. We'll talk about that in a minute as well. And I know that I mentioned that this program is actually two different programs, so let's break those down. They're actually called Home Possible and Home One. So let's start with Home Possible. That's going to be the one that's primarily for lower income borrowers and buyers. So let's talk about what the stipulations are on that. So Home Possible is the one that's more similar to last year's 1% down mortgage. And that one, you have to have a minimum 620 credit score. So I know with FHA mortgages, we can get you a home with a credit score as low as 580. Although I don't necessarily recommend that, depending on your situation. You might be better off to take 6 months or 8 months or however long it takes, get your credit bumped up to where you're at a 620 or higher, and you can qualify for that lower interest rate, because right now rates are high enough as it is, and you're going to get killed as an FHA borrower with a 580 credit score. They're going to kill you on interest. So depending on your situation, it may or may not make sense to do that. But I'm not exactly the numbers guy, so I do have lender partners that I 100% rely on and trust in, just with everything that has to do with my clients. So if you're somebody who's kind of borderline and you're not sure, just let me know. We'll figure out what the best scenario is for you. With Home Possible, there's also an income restriction. So with this program, you can't make more than 80% of the area median income. And what that means is, say in Ferndale, and I don't know if this is accurate or not, but say the median annual income for Ferndale residents is $100,000. You can't qualify for this program unless you make 80 grand a year or less. And a home ownership class is required for this program as well. And that's pretty much par for the course for any of these like down payment assistance or low down payment programs. Most of the clients that I've worked with that have been through like MISHDA or any kind of other down payment assistance program, anything like that have had to take this class, actually said it was quite informative and they were actually happy they did. So that's not necessarily a bad thing. I know a lot of times they offer it online, so you can just do it from home. You don't have to make an appointment and go somewhere and sit in some boring class. You can actually just do it at your house. Most of the time, I don't know if that is accurate for this program, so don't get mad at me if you do have to go somewhere, but it's not really a bad thing to learn about everything it takes to become a homeowner. So that's Home Possible. Now let's talk about Home One. That one, for that program, you need a minimum 700 credit score, so you need to have a little bit better credit, but there's no minimum income requirement. So you make $3 million a year, qualify for this program, no problem, as long as your credit score is at least 700 and you're not purchasing a property that's more than $500,000. I mean, I guess you probably could purchase a higher, a more expensive home than that, but UWM is only going to give you 15 grand for the down payment. So with that as well, so there is a little stipulation with Home One as well. And that it just simply is there can be more than one borrower on that program, but as one of the borrowers that is using the home as their primary residence, where you're going to be the home you live in, has to be a first-time buyer. And I know I've mentioned this before on this channel, but just to reiterate, in the mortgage world, a first-time buyer is anybody who hasn't had a mortgage in their name in the past 3 years. So say you had bought a house in 2010, you had a mortgage on it, you sold it in, 2020, you haven't had a mortgage in your name since, congratulations, you're now a first-time buyer. So those are the two kind of facets of this program, and it gets better, believe it or not. Both Home Possible and Home One are eligible for TRAC, T-R-A-C, which is another program that United Wholesale Mortgage offers. And what TRAC does, it potentially allows you to eliminate having to pay for a mortgage title policy when you purchase the property. And I know I'm kind of getting into the weeds on all that, so let me break this down and explain what that means too. So say you're shopping around, you just end up paying cash for a home, right? That seller, when we close, is going to provide you, the buyer, with a title insurance policy that's called the owner's policy. And what that does is it protects you against any, liens or claims against that property or clouds on the title or encumbrances, So say, somebody shows up, you've owned that house for 2 years, and somebody shows up with a quit claim deed that was never recorded from 1980 saying, hey, I own 20% of this property. The title insurance policy says, no, you don't. And we'll, take care of that for you so you can rest assured in your own home, knowing that you own it free and clear and there's no clouds on the title or any liens or anything like that. So that's for a cash deal. Say you're getting a mortgage on that property. So what's going to happen is that seller is still going to provide you with an owner's title policy, but as part of the mortgage process, you have to insure the mortgage company as well. So you're going to provide them with a mortgage title policy, which isn't as expensive as the owner's policy, but it's still an expense. And if we can eliminate, as many expenses as we can eliminate in the home purchasing process, that's a good thing. And with Track, there is an upfront cost to that, but as long as that's less than what the mortgage policy would be anyway, it makes sense to do it because it's just saving you money. It's streamlining the process. It makes it that much quicker to close and get you into that home on time. And I mean, I don't know how much quicker UWM can possibly get, but right now we're averaging 12-day closes on conventional mortgages, which is insane. I've been in this business 21 years. I've always budgeted like 30 days or more for a conventional mortgage and like 45 for FHA or VA. We're closing people in 12. So, if we can streamline it even more from there and cut down a couple steps in the process, that's just a beautiful thing. I'm super excited for it. And to me, it's awesome. Like UWM, we're so lucky to have, we've got so many good lender companies right here in Metro Detroit, but we've got the number one mortgage company in the country is right up the road in Pontiac. So, and they're coming out constantly with these innovative programs. They changed the game with that 1% down mortgage, and there was a bunch of copycat, everybody else had to kind of catch up to them. But with this 0% down, this is exclusive right now. I'm sure everybody is going to be jumping on this before too long. But as of right now, it's exclusive to UWM. And, I mean, Track, same deal. So, they're just always innovating, trying to make it easier, more affordable, and just like a faster process for people to get mortgages and get into their new home. So anything that makes it easier and not more difficult, I'm all about. So let's kind of back this up. Like I said, is this 2008 all over again, or is this a brave new world? And I'm gonna show you why I don't think this is gonna kind of lead to the same kind of craziness that we saw in the Great Recession. And mainly that's because there are so many guidelines involved, and there are there's restrictions, there's more safety nets there, guideposts, guardrails in order to make sure that we don't just have some crazy out of control mortgage industry like we did back then. Take me for example. So the home I live in still in Ferndale, I bought it in 2005. And I got an 80-20 mortgage, which is exactly what it sounds like. It's 0% down. So I was kind of doing the same thing. The only difference is, well, there's more than one difference, but the main difference, the one that sticks out to me, is when I was getting pre-approved to buy that home, they didn't pull any documentation from me at all. No bank statements, no W-2, 1099s, anything like that. They ran my credit, and I had a high enough credit score that they let me buy a house. And on top of that, when I was, so my lender partner at the time, he's, working on the pre-approval, and I kind of poked my head in the room. I'm like, hey, how much do you think I'm going to get approved for? He literally looked up at me and said, how much you want? They would have given me $3 million if I asked for it, just because I had, that's how it was back then. It was insane. That's why, people were getting mortgages and putting it in their dog's name. There was no there was no accountability, no guardrails at all. It was insane. That just people that had no business qualifying for mortgages were just, here you go, but go buy a house, with the idea that, if they started to get underwater, they'd just refinance and but then the home prices started tanking, so you couldn't refinance, and that's what caused the whole thing. It just kind of like cascaded into this big, huge mortgage mess and tanked the whole global economy. So we're gonna try and not do that again this time. But so I don't think we're gonna run into that situation again. I mean, I hope that the powers that be that kind of oversee this have learned their lesson, because I don't trust like any industry to police itself. Eventually they're going to forget all the bad lessons and do them again. But hopefully we're not going to see a repeat of 2008 ever again in our lifetimes. And if we do, it's going to be like so far out in the future that we're not going to care, because we're going to be, we have one foot in the grave anyway. But, I don't think we're seeing a repeat of that. I think they're just like figuring out what they can do right now in this environment where the mortgage rates are a little bit elevated, to just make homeownership easier and more affordable. Talking about rates for a second, rates right now this week are just a touch below the 30-year average. So I know everybody's talking about, rates went back up a little bit. They're so high. It was better in 3 years ago it was 2%. Well, yeah, of course. They were artificially low then, and they're kind of artificially high now, because what we're trying to do is combat inflation. But inflation seems like it's starting to recede, and hopefully that means we're going to see lower rates here coming up in the relatively near future, like the next 4 to 6 months, I hope. But even if we don't, we've got programs like this that make it easier for any borrower really, or specifically first-time buyers to get into homes. So thank you so much for watching, and I apologize for not putting out a video last week. I was a little bit under the weather. I'm still kind of getting back from that. So, but I promise I'm working on that St. Clair Shores waterfront video. I hope to have that out next week. The editing on that is taking forever. But I will get it done and get it posted pretty soon, because it's going to be a banger. But thank you so much for watching, guys. I truly appreciate it. If I can answer any questions about this program, any other mortgage program, anything real estate related, you can call or text me anytime. My direct line is 586-491-5622. You can also reach me at 248-561-6155. Shoot me an email, dwerenka@m1realty.net, or Facebook, Twitter, Instagram, LinkedIn, you name it, I'm on it. Shoot me a DM and I'll respond quick. And until next week, thank you so much, guys. I really appreciate y'all, and I love the fact that I get to have first crack at programs like this, all these little innovations that are coming out, and talk about them with you. Hopefully before most other agents jump on the bandwagon and let you know about it too. So thanks so much, guys. We'll talk soon. Have a great one. Let me know if you need anything at all from me. I'm happy to help. Thanks.